Welcome to The Interest. I'm Ryan Kingsley. In today's episode, Shane Kidwell has new advice for making technology your friend and not your enemy. And our friend Steve Richman takes out his GPS to lead you down the road to riches. So listen up. But first, a story. Efforts to close the racial homeownership gap in California have led some housing advocates to push for the passage of a state-level Community Reinvestment Act that would specifically monitor non-bank mortgage lenders, not regulated by the Federal Community Reinvestment Act, passed in 1977 to address the issue of redlining. However, a coalition of mortgage industry experts and housing advocates warn that implementing a state-level CRA law would likely undermine affordability and access to homeownership for the very borrowers that a California CRA law would seek to serve. Here's the story. Jamie Buell is a research analyst for Rise Economy, a statewide alliance of housing and community development organizations in California. Buell has studied California's racial homeownership gap for years and argues that because non-bank lenders have stepped forward, lending in underserved communities where traditional banks have stepped back does not mean non-banks are serving these communities better.
Independent mortgage companies, state-chartered banks have, if they are well-serving these communities, then they should have no problem with at least being evaluated as a first step of their, provisions and service of these communities.
Contrary to Buell, it's not evaluation, but costs that worries Bill Lohman, CEO of American Pacific Mortgage, one of the largest independent mortgage banks in California.
Continuing to add cost or complexity, is going to add costs. And ultimately that gets passed on to the consumer.
An April 2023 report published by the Urban Institute's Housing and Finance Policy Center revealed that IMBs dramatically outperform banks, particularly in government lending. Lori Goodman, an Urban Institute fellow and author of the report, says,
I'm not sure banks should be subject to CRA because they're already doing more. They're in one line of business. It seems like it's a solution in search of a problem.
Defining the problem a California CRA law would seek to fix is at the heart of this debate.
Non-bank mortgage lenders really obscure or don't provide as much data on race in terms of who they're lending to under HMDA.
Industry leaders see the issue through a different lens.
IMBs are by far and away the first lender and the lender of choice for the very borrowers that a new CRA-like program is intended to support in the first place.
Read more about how a state-level CRA law would undercut itself in California at nationalmortgageprofessional.com. For The Interest, I'm Ryan Kingsley.
We all dream of owning a home, but for too long, if you didn't fit the mold, you were stuck. Stuck because the system worked for everyone except you. We've changed that. Angel AI uses advanced AI technology to give a 100% trusted solution and fast answers for worry-free financing, allowing you to achieve fair and equal access to lending. Angel AI, AI you can bank on.
Hey guys, it's Shane Kidwell back for another discussion about technology. And this is one that I love. It's not necessarily sexy, but talking about your point of sale and the technology you use for that client application experience is huge. And there are a couple of companies out there that really do this at a high level. And my good friend Candido, who is one of the top originators on the East Coast that has been just a friend and a contributor with me for years, uses one called Blend. Talk a little bit more about Blend and how you use it.
Yeah. So, I was lucky enough to, at a former company, I helped onboard Blend. So I was able to kind of see behind the scenes, not only what, most originators are able to use, but the nice thing about it, there's an app. And frankly, no matter what you're using, I'm saying there's an app actually on your phone. You really should have access to something like that makes your life a lot easier, right? because let's face it, if you're good at your job as a loan originator, you can't just be sitting at your desk all day long. So leads are coming in all the time. It's nice to be able to just copy and paste, whether it's an application link or, check something on the fly. Something like Blend really, goes above and beyond and simplifies the process. Another thing that I really like about Blend is on the desktop version, you're actually able to jump in if you have people that might need their hand held when going to actually fill out the application. You can actually jump in and see where they're at, so that way you can help figure out, okay, yep, this is easy. You just have to fill this part and go about it this way. So something like that really should be what every top originator has available to them.
Yeah, if you're an originator and you don't have a mobile-friendly point of sale that your customers can engage with on their phone, you are missing the boat. And Blend is, I think, really kind of at the forefront of that. They're so good at it that other companies like Encompass that have their own point of sale actually integrate with Blend. And so most of the top companies that use Encompass will use a system like Blend in conjunction with. So I love that about it as well.
Yeah, and for me, I got to be honest. I spend a majority of the time pre-application in Blend. I don't necessarily really use Encompass until it's a live app. So there's a lot of different things that you can do straight from Blend without ever needing to actually jump into the LOS or Encompass in my case.
100%. Well, guys, as always, refining your tech stack is huge. We'll see you guys next week for another edition of the Tech Talk.
You're facing a situation. You ever feel overwhelmed and say, oh my gosh, I don't know what to do? Let me make it really easy for you. There's only 3 things you can do. You can see it, you can A it, or you can L it. That's the CAL principle, C-A-L. What's C? Change it. And you have to ask yourself, do I have the power to change it? Do you have the power to change rates? Legally, right? I mean, you have to see, what do you have the power to change? And if you can't change it, you can A it or you can L it. And what is A? Accept. Accept it. Now, do you know anybody who goes, oh, I'll accept it. If that's the way it's going to be, fine. But I'm going to be miserable and I'm going to make you miserable with me. Do you know anybody that's like that? That's not acceptance. That's fighting it. This is the CAL principle, not the CAF principle. There is no F in this whatsoever. To accept it means to accept it, not to fight it. And if you can't change it and you can't accept it and you wake up every day and you say, I hate this. This is miserable. I can't do this. I'm miserable. It's horrible. It's time to leave. Folks, leave it. You have one life to live. If you're making yourself miserable, everybody around you miserable, you're not helping your customers, you're not helping yourself, you're not helping your family. Now, what I'm not saying is, oh, you know what you should do? Go to another company. That's not what I'm talking about, because guess what? They have problems too. Todd Duncan will tell you the most successful loan officers are what? With the same company for 14 years or more. What do we look at? The grass isn't greener on the other side. The grass is greener where you water it. So you have to change it, you can accept it, or you can leave it. But those are your 3 choices.
For more on these and all of today's top stories, go to nationalmortgageprofessional.com.